Hello friends, this is Raj Sastry from Raj Option Trading. Today is March 30, 2022. Let's take a look at top electric vehicle stocks. So with that, we'll take a look at a few of those. Starting with Lithium Americas. It's a lithium stock, has been doing very well. And then you got Albemarle, again a lithium stock. It's also been doing very well. Let's see if it's worth buying here. Then we got Blink here. It's a charging play here. Stock has been not doing so great. We'll take a look and see if it's worth buying here. Then we got Picks and Shovel play, Magna. I think it's helping a lot of EV makers to produce EVs. Let's see if it's good to pick this up here. And then we got one more lithium stock, SQM. It's also a good one here. And we got Cerence. Cerence stock has been beaten down big time. Let's see if it's worth buying up here. And one of my favorite, Keysight Technologies. It's also beaten down, trying to go higher as we speak. You've got Autoliv, again a good one, Picks and Shovel play. And you got a Ferrari or Race. It's also a good one, quietly going higher. And you got Stellantis. It's again Stellantis. It's again a great one, quietly going higher. I think it's not getting enough coverage. And we got speculative plays here, both Lucid Air as well as Rivian. Stocks have been battered off late. Good to pick this up at this time here. And we got Tesla. Tesla is what can I say? Tesla, it's been doing great. It's got a split coming up. I think even up here on a pullback, it's good to buy Tesla. They will do very well. They got at least a 10-year jump on top of traditional automakers like Ford, GM, and so on and so forth. So with that, let's jump in and get started. All right, so we will look at top EV ETFs, look at lithium stocks, look at the EV battery stocks, look at EV charging stocks, picks and shovels, software stocks, also EV stocks and automakers. So with that, let's jump in here. Look from a top EV ETF perspective, we got lithium or LIT. That's the biggest market cap, as we call it. It's a net assets about $5 billion, and it's been doing great. Look, lithium is doing very well. 166% in 10 years, not a small feat here. That's a good one here. You could always bet on lithium because it's required for all the EVs. And then you got your drive. It's an autonomous driving ETF here, and that's been doing very well also. I mean, not great, but it's okay. It's been battered, but now it's coming back slowly. Look, in 1 day, 5 days, it's been going higher. And then you got a few more. We got ARKQ, Cathy Woods ETF, as many of you know. It's also been doing very well off late. It's done great in 5 years, as you see here, but off late, it's also getting its groove back. And we got a few more here. We got BATT, BAT, again, EV battery ETF. It's also trying to come back to life here after getting battered down. And we got a few more, iDrive, Moon and Cars. It's sorted by net assets under the management here. The first one is the highest here with the lithium. Looks like lithium is going strong, in the EV market. All right, now let's look at lithium and battery technology stocks. From a lithium stock perspective, the big stock here is PLL. Look, PLL has got $117 billion market cap, and look, they got they are doing okay, not too great here, but I think they're doing okay. They got some negative free cash flow, as you see here. Overall, I think they do have some cash, $82 million. And then we got a few of my favorites here. We got Albemarle, which is one of my favorite. It's a better run company, as you can see here. Look, they have done 127% in last 5 years, and they got about $439 billion of cash. And along the same line, SQM is one of the most stable stocks. They got a lot of money. Look at the amount of cash they have, $2.4 billion of cash. It's a free cash flow positive company. If you're a conservative investor, you should go with probably SQM. It's a better run company. And also FMC is also a good one here. Look, FMC, they are doing pretty well. They also have positive cash flow, and they got about $7 million of cash. Not too much cash, but it's also doing very well. Look, 5-year performance of 164. And Lithium Americas is one of my favorite here. It's also a great one here. Look, they've been doing great. The performance is 846% in last 5 years, one of the highest in this group here. And they do have positive, they have cash on the balance sheet, about $500 million, and it's also doing very well. And then you got LTHM, it's also doing okay. You could look at such companies. If you're a conservative investor, look at the net margin positive companies like SQM and FMC and ALB, you will do well. And then you got here lithium battery stocks here. Lithium batteries required for most of this charging as an example, and even batteries very essential part of EV. Look, we got few players here. And one of the problem in the lithium battery is still very early in the game. And look, net margin is all negative for most part here. And stocks have been battered. Look, in 1 year, except the one right here, LAC, which is a lithium play, all the battery stocks have been down big time in last 1 year. So here you got to be selective here. I would go with the maybe biggest market cap names like QuantumScape. Even though it's an early stage, QuantumScape is a better run company here. You could go with that. It's also rebounding in the near term, as you see here. And we got SDLP, which is a solid power. It's also a SPAC type play here, and they're trying to go higher slowly, but look at the valuation, sky high valuation. It always probably is good to stay with stocks like QuantumScape. And for the lithium, you could go with Lithium Americas, which is a lithium play here. So with that, let's go and jump in. All right, let's look at the chart here. We got SQM here. Look at the performance. Great run in 2022, and right now it's a little bit small down tick here. If this comes down, I'm a buyer. Lithium is always required. Look at the run here on the balance volume is going higher. That tells you there are more buyers than sellers. So for me, I would wait for a small pullback here. Look, RSI 67, that's an oversold level, almost oversold level. So I would wait for a little pullback here and then buy SQM. And then you got FMC. FMC is a great one. We already got a pullback here. You could slowly buy at this level here, and on the balance volume is also going higher. And then you got ALB. Look here, we got a nice downturn here. Stock is trying to go higher. RSI 63. This one you can buy even up here a little bit and buy more on the pullback here. And then got Lithium Americas, again huge downtick here, and now it's trying to go higher and small pullback here. You could buy this one also here. This will also do very well. All right, now let's look at charging picks and shovels type plays in the EV market. Some of the picks and shovels do great. All right, so from a charging perspective, we got two big gorillas here. One is ChargePoint. ChargePoint is a $19 stock. This really tough time to be in the charging business here. A lot of infrastructure and upfront investments. Look, it's trying to come back here in the near term with the stock market trying to go higher, but it's down 47% from 52-week high. And we got Blink Charging, other competitors. They're also along the same lines here, down big time, but they've done great in last 5 years or so. And then you got newer players like Wallbox and EVgo. Same territory. Stock is trying to go higher in the near term. If you want a better run company, I say look at the gross margin, and ChargePoint has a better gross margin than the other players. You could probably stick with that. And if you want a second pick, that could be Blink here. All right, now let's look at picks and shovels play. Again, sorted by market capitalization. Stock on the top has got highest market capitalization. So my favorites are really, I look at the net margin itself and see how is the net margin look like. Net margin is highest for the top 2 companies or top 3 companies here, and even THRM is good. you want a company with a better net margin, so you can go with the stock like even APTV, Magna, and you could also look with the THRM. THRM has been doing great. Look, THRM has got 95% performance in last 5 years and one of the highest in this group here. And you could go with that. It's got a nice net margin of 9% here. And then you could go with LKQ, other good player here, $13 billion stock. And this one has done 61% in last 5 years. You could go with that one also. And you can also look at the free cash flow here. Look, both the MGA and LKQ have got highest free cash flow here. You could go with those two players. You will do very well. You know, I also like BWA here, and they will also do very well. You could look at BWA here, and they got 19% gross margin, a little bit less here, but you know, when it's beaten down, you could buy this one also. All right, now let's look at the chart here. From a chart perspective, look, you know, this is very interesting to invest in charging companies. Look, it's down big time, consolidation pattern, going up, down big time, consolidation, going up. It's really clockwork, you know, when to buy. Right now it can have a little more room to run here, but soon it will come down. It's a normal pattern for these type of companies here. And Blink is same thing here. After consolidating for a while, now it's trying to go higher with the broader market going higher. So at this time, I say, you know, wait for a little bit pullback here, then you will do well. For Blink, you could even buy up here. It's not gone up too much. You could buy up here also. And then you got MGA, Magna. Look, similar pattern here. Stock has been in the sideline for a while, dropped off. Now it's trying to go higher. At these levels, Magna is a good one here. RSI 51, middle of the road. You could buy some Magna here. And then you got Aptiv. Aptiv also look down big time. Now it's trying to go higher. RSI is 57. You could still buy Aptiv here. This is also a good one here. All right, now let's look at EV software. EV software has got high margin, as you know. It's again required by most of these EV players. From an EV software perspective, you know, first three companies, Apple, Microsoft, Google, you know, they are the leaders, as many of you know here. Anytime there's a market pullback, you could always buy these companies. Look, they got, you know, more than $1 trillion market cap here. Very solid companies. Look at the profit margin. Net profit margin is great. Alphabet is being the highest here. These stocks, when they come down, you could just buy them, don't worry. And you could also buy slice it. If you don't want to buy entire stock, you could buy a slice of the stock for expensive stock like Google. And then my favorites are really stocks like Keysight Technologies, KEYS. You know, that's a good one here. You could buy this one here. It's trying to go higher now. Earlier on, this got battered. Now it's trying to go higher. Look, it's got 19% net profit margin. It's a profitable company. And then you could look at ALGM. Again, a nice profit margin, 17%. And you could look at that one also here. And then you got a few more positive net margin companies like CRNC. This stock got clocked when it reported a while ago. Now it's trying to make its way higher. RSI is 52. You could still buy this company here. They will also do great. So with that, let's look at a few charts. From a chart perspective, you got Keysight Technology. Look, this is down big time, and now it's trying to go higher. It's one of the better player here. I would be a buyer of Keysight Technology at these levels. On the balance volume is also trying to go higher. And then you got CRNC. This stock got really dropped off big time here. Now trying to go higher. At these levels, it's okay to buy some CRNC. They might surprise when they announce earnings end of this month and end of next month. And then we got Microsoft here. Look, after being down for a while, the broader market is going higher. Microsoft is also going higher along with it. I would say wait for a little pullback here, then you can buy Microsoft. And we've got Google here. Google, look, it's a better player here. Stock has been up and down. Right now it's up. I would say wait for a little pullback in Google here, then you can buy Google. All right, now we got automakers. These are the EV automakers. Let's look at these stocks here from a EV automaker perspective. Look at the market cap here. Tesla, finally, it's $1 trillion stock. Can you imagine? This used to be, you know, Musk used to tweet saying he want to take this business private while ago. Now look, it's a $1 trillion market cap stock here. Tesla is a Tesla. It's got a big jump in the EV space. I would say it's a great one to buy on any pullback. Now there is a good news about a stock split. I say, if there is a market-wide sell-off, buy some Tesla. You will do very well with the Elon Musk. And you could take a look at the net margin here. I like the net margin positive companies. Look at Ford, Toyota Motors. They're all okay when they're down. You could buy them. And look, we got STLA here. It's also a good one here. Stellantis. I think on any pullback you could buy this company. Look, it's a free cash flow positive company. They got a lot of cash, $57 billion of cash in the balance sheet. That's a well-run company here. And we have beaten down names like Rivian and Lucid. So, these are a little bit speculative, as many of you know here. But, at these levels, you could buy Rivian as well as Lucid. They will do very well. And look, both of them have got about $5 and $6 billion cash on the balance sheet. Right now, free cash flow negative. If you want a better company, I would say go with the better one with the better Altman Z score. I say Lucid is better than Rivian from a financial perspective here. And we got a few more here, Chinese names like NIO, Li, XPeng. All these stocks got dropped off big time here. And if you want to go with the better names here, I would say go with the Altman Z score higher. All these three names are okay, but Li and XPeng seem to be better. And Li especially, it's got a lot of free cash flow here. You could go with Li, which is a free cash flow positive company. And then you got a few more, as you see here, and net margin is positive for HYZN. It's a $6 stock, very low sales. It's just $2 billion sales. That's why net margin comes too high. But look at the cash flow here. All of these are cash flow negative companies. Go with the stock companies with better cash on the balance sheet. For example, Fisker here, they got a lot of cash on the balance sheet, about $1.2 billion. You could go with such companies here. All right, so with that, let's look at few chart. From a chart perspective, look, we got Tesla here. Tesla, after coming down for a while, going up and away. At this point, I would not buy Tesla. I would wait for a little pullback and then buy Tesla. When they go up so a big time here, look, it's done this earlier. It'll come back when the market sells off. I would wait a little bit for a Tesla to come down here. On the other hand, Ford, you could even buy up here. It's been big time down, trying to go higher here. Even up here, Ford is a good buy. On the balance volume is trying to go higher. And they got nice Ford pickup truck electrified. I think it's a good one. And then you got STLA. Look, it's sold off here, trying to go higher. At these levels with the RSI here, 53, you could buy some STLA. They will do very well. And you got Ferrari or Race. They are also electrifying their fleet here. Stock is going higher. I say wait for a little bit pullback. You could buy Ferrari. It's also a well-run company. All right, so with that, thank you very much. Happy investing and trading. Please subscribe.